Good morning, everybody. It's Ben Buckner with Ag Resource Company in Chicago. It's Wednesday, August 6th. Markets are mixed. Very little change. Soybeans attempting a comeback once again. Grains a bit weaker. Multi-year lows for a lot of contracts. Still trying to find ourselves something really to sink our teeth into. And I think we're all watching whether the U.S.-Chinese trade deal deadline gets extended another 3 months, which I think the market and we at Ag Resource think that is probably the case. No big purchases of U.S. ag from China probable until then. So we are probably missing some opportunities, at least for soybean exports, thinking about September and October. So that's, I think, lingering in the background and keeping rallies kind of confined to short covering events. We've talked about the fund's soy meal position being incredibly short, all-time record. That has been covered to some extent, and that's given some life to the soybean market. But can it continue? It's a big question. Otherwise, not much new. It's still kind of the same old stuff from us. We've got energy and ethanol data due later this morning. I don't think there will be any big surprises in that. We are seeing seasonally ethanol grind probably peaking until we get new corn supplies in bulk. But soybean oil kind of leading the way for the soy complex this morning, I think, is because we've got a recovery in crude oil, and the crude oil market, rightfully so, has been unable to trade below $64, $65 a barrel for any length of time. I think this kind of shows you why. So the crude inventories in the U.S. commercially available have been kind of flopping around between 420, 428 million barrels, down anywhere from 1 to 7%. Year over year, all year long. And so the crude oil market in the U.S. is not abundantly supplied. So again, I think until you get to the very end of the summer driving season, you really start to build stocks on a lasting basis. That happens in about late September, October. Thus, it's still very hard to be bearish of crude oil below $65 a barrel. So the market's sitting today. So the energy markets are, I think, pretty neutral. There's a pillar of support there. So that spills into the soy oil market. But otherwise, the ethanol market hasn't totally benefited from this. We have seen the cash swap ethanol market do very little the last 6 months. Margins do exist, but I think it's the improved conversion rate for corn, and probably more so just the inclusion of sorghum, has really weighed on outright grind numbers since about the end of winter. In June, officially from NASS, corn used for ethanol was 448 million bushels. Was 442 in 2024 in June. Most likely, though, we think the corn used for ethanol number in the month of July will be about 465 million. That compares to 484 million a year ago. And so all of a sudden, since we've seen this really high ethanol yield, more sorghum, there is evidence to support, I think, the USDA trimming its industrial corn use forecast, maybe by 5 or 15 million bushels. But it's been a lot less exciting since sort of the post-harvest period, when ethanol was giving corn an outlet for demand and clearing some large inventories. That's no longer the case. We will see how the extent of the rebound that we get kind of October, November. But ethanol has kind of lost its luster recently. Otherwise, it's still supply, and so it is mixed. We are looking at maybe some prolonged dryness and warmth kind of in the southeast corn belt, including Indiana, Ohio, Kentucky, some major producing areas in those states. But does it threaten these national yield estimates that we've seen that range anywhere from 185 to over 188 bushels an acre? And maybe probably not today. We will see how the second half of August evolves. But I think dominating features in weather overnight. Got some pretty heavy rain in really concentrated corn and soybean areas of South Dakota, North Dakota, and Minnesota. Radar maps this morning show the system working pretty considerably across the state of Iowa. And so you see that the NOAA's forecast on the right, 7-day QPF. This is in agreement with the AI, EU, GFS models. So most likely some pretty heavy rain and some pretty sizable corn and soybean producing areas. I mean, entire state of Iowa, really concentrated areas of Nebraska, Northeast Kansas, Wisconsin, even the northern third or so of Illinois should get some pretty good rain. So I think we're adding to bushels more than we are subtracting. I think what's jumped out to us, and we know the weather's getting a little tedious, is we haven't seen any real impact from any kind of bouts of heat and dryness on vegetation health, at least. And I know that there's more nuance to yield than just measuring, normalized different vegetation index numbers or NDVI numbers year over year or compared to average. But I think this is showing us that the ingredients for these really special yields is still intact. So this shows you nationally as of August 4th how vegetation health compared to average. So a lot of green on this map. And that Iowa's vegetation health is the highest on record for this particular week. Yeah, really the highest ever on record for any week. It's not surprising. We've seen Iowa specifically be blessed with pretty mild temperatures, a lot of rain, dryness when the state needs it, including a lot, big part of this week and last weekend. But what jumped out to us is as we're kind of analyzing and thinking about maybe the eastern Midwest does go through this prolonged period of net soil moisture loss at least. Ohio's vegetation health also the highest on record ever for any week that's been recorded, and especially for this week. So that was interesting, and you can kind of do the same thing. We're either at or above previous records in NDVI for Ohio, Indiana, and Illinois. So I think the idea is that at least if we get rains, milder temperature at some point in the second half of August, a lot of crops probably can withstand this. So just want to communicate the risk to the market. It's still probably for really high estimates, an upward revision in the USDA's August report, maybe in September as well. So I don't think we're going to get a supply shock anytime soon, just based on weather, crop ratings, vegetation health. This is all pointing to the same thing, and those are very, very high yields. And kind of finally, we look at just the overall trend in agricultural markets, especially. And so we're looking for something to identify that this is inflationary, something is changing, a market is imbalanced, and it's just hard to find. Explaining the Chicago Board of Trade ag markets is pretty easy. Mother Nature has blessed a lot of the world with very good weather. But even looking at sort of the core of China's protein or meat market, it seems like they're selling soybean meal into the export market, not keeping it at home. The Chinese hog market doing very little. It's actually down $2 per ton at 192 this week. And you see we kind of missed or avoided what are normally pretty positive seasonal trends in the Chinese hog market that kick in late June, July. Those are absent. So it does seem like we look at cotton prices, rice prices globally, wheat prices globally, China's hog market. It just seems like everything's found some kind of equilibrium at a deflated price. So we're not really sure what's to drive things higher in the short term, at least. Probably is turning our attention to the southern hemisphere. First wheat in Argentina and Australia, August to October. Will there be a supply threat there? And then it's just kind of measuring the odds that there's some kind of dislocation in South America, maybe August 15th onward. So unfortunately, kind of more of the same from us. Probably, again, we got to find out how big U.S., European Black Sea crops are before we find some kind of lasting low. And for Ag Resource, we're going to continue to kind of dive into by state yield forecasts. So, of course, a dollar gets you in there. We've got our crop tour kicking off in just 10 days. We will get to the bottom of real potential in Iowa and Illinois, at least. So be sure to check that out. Otherwise, as always, all the best in the markets. And we will be back tomorrow with more information. Thanks.